Welcome to the Passive Investing Show. I'm Ashley Wilson, and I'm joined here with my co-host, Jay Scott. Hey, Jay, how are you doing?
Hey, how's it going, Ashley?
Good. Everything is good. We had a great guest today. We spoke about everything with Eng Taing from Tozy Capital. And I think a lot of people are going to like this episode because there are so many different pieces of information, different passive investing opportunities that he's tackling.
Yeah, absolutely. So, like you said, Eng is from Tozy Capital. He runs Tozy Capital. He is a Silicon Valley engineering guy who now runs lots of different funds as an operator. So he manages multifamily fund. He operates senior living communities. He operates oil and gas business. And the thing that we're going to talk about most today is the fourth arm of his business, which is a Bitcoin mining investment company. So if you have no idea what Bitcoin mining is, you're going to like this episode because we talk all about the intricacies of Bitcoin mining, how Bitcoin works, how the mining side works. And then we talk about the specific investment that he has available to investors who might want to invest in Bitcoin mining. And so he talks about, you'll be surprised, a lot of tax benefits with this particular investment, as well as cash flow benefits and other benefits. So without any further ado, let's welcome Eng Taing to the show.
Eng, welcome to the show.
Thanks for having me, Ashley.
Thanks for being here. If you could start off by introducing yourself, letting our listeners know a little bit about your background and what you're doing today.
Yeah, happy to. I am the CEO and founder of Tozy Capital, a private equity investment company that is really just an extension of what I've been doing for the last 13 years, which is investing in real estate, crypto, and other investment streams that has provided me sort of the ability to retire from my full-time job 2 years ago, which was at Apple, and really think about investing both passively and actively. And that's what I've been doing for the last 2 years.
Awesome. So what, just a little bit of background. So what were you doing at Apple? What type, were you on the engineering side, the business side?
Yeah, I was on both the engineering and business side. So I've had several roles. One, I started at the business management side where we were forecasting iPhone sales. So 6S cycle, I predicted that. And the 7, it got off by a couple 100 million iPhones. And then I worked on growing and launching Apple Music and Apple TV on the product side. And then the last role I had was leading data science on Siri, where we analyze literally trillions of records of human intentions and words and speech patterns. It's very different roles altogether.
Awesome. So the fact that like you kind of launched your own venture, you're an entrepreneur, kind of makes sense because your experience is both on the business side, the product side, and the engineering side. So that makes sense. Before we jump into, and I know we want to talk a little bit about, or a good bit about your Bitcoin mining operation. But before we do that, would love to talk a little bit about what you invest in passively. So as an investor, what types of investments do you look for?
So I love investing for both cash flow and tax advantage because most of my investments make a lot of money, and I would love to keep more of my money and invest that. So a lot of times, any tax favored advantage investments. So some stuff that I do myself, I've invested in other people's multi-family syndications, as well as self-storage and mobile home parks. So my thesis is I like to invest with people that are really entrepreneurial and hustlers themselves that wouldn't back down from a macroeconomic challenge or any micro challenges that arise. So it's mostly about diversifying my asset classes that I'm not in, but also investing in people that I believe in.
Excellent. I actually am a firm believer that people make the difference when it comes to investing. So Jay and I are in complete agreement and alignment with you on that concept. If you could talk a little bit more about Tozy Capital, your company, and what you're doing and how you're allocating different capital of passive investors who are coming to invest with you?
Yeah. So I want to take a few steps back to all in the beginning. And I like to highlight that I wasn't born with money. I actually was born in a refugee camp in Thailand. My parents escaped the Khmer Rouge and genocidal regime. I came here when I was 3. I'm very grateful for that. Very grateful for growing up in America, and didn't have much. I was on welfare for all my life, all my young life. And then I went to college, but I was really good at math. And when you come from that kind of background, you really want to have security, financial security. And for those looking for financial security, in a rocky market, it doesn't feel like you have it. Even though, for me, I used to work in investment banking. I used to be a day trader. I used to play poker. These are all things that I'm good at because I recognize data patterns well, but I don't like the intention of sort of seeing stuff go up and down outside my control. And so I've always gravitated towards sort of steady cash flow investing with good tax strategies, which gives you a little leg up. And so Tozy Capital is really an extension of the fact that I saw a lot of my fellow employees at Apple not know all these things. They're very smart people, top of the class in terms of their skill sets and talent, making millions of dollars, creating products that billions of people use. But their financial literacy is very little. They don't know anything besides putting 401k and having Apple stock, and it's very concentrated. And so when I started talking about what I've been doing with buying multifamily buildings early on, really when I was 23, and then buying one every other year, they were like, "Oh, I don't know how to do that," and they didn't think that was even a great idea because they've seen Apple go crazy up. They've seen their tech stocks go crazy up, and I realized that, first of all, they don't understand the great tax implications of passive investing or investing in those type of assets like real estate. But also, they had to keep working to make that money, and they made a lot of money. And they probably could retire. But when you're in Silicon Valley, and the price of a 1-bedroom condo is north of $1 million, you can feel rather poor or middle class, even when you're making a significant amount of money. And so when I started talking about all this to my fellow employees and was planning my exit personally a couple of years ago, I realized that there was such a great opportunity for people to potentially come into some of the stuff I've been doing right along, and because people have always asked me, "Hey, can I participate in what you're doing? Can I help? Can I give you some money so you can invest with me?" Tozy Capital is sort of an extension of that, from professionalizing it and realizing that there is such a great demand for it, because it's just providing opportunities and education to folks that might not have ever seen it.
And so when you say opportunities, so what types of opportunities have you been providing to those that you've worked with and those that you know? In what spaces are you operating?
Many spaces. Actually, right now on the contract and closing in beginning of June on a 319 unit multifamily building in Houston, Texas, $65 million deal. This will add to our 1,000+ stores in multifamily. But I also have 13 senior living communities. They're all very highly profitable, and some are developments. We've had some mixed use of real estate, but we have also had debt, private equity factoring businesses that we provide strong returns on. Usually double-digit cash and cash returns paid monthly. I really like the feeling of giving people money on an income that feels like a replacement of income or supplement of income. And then most recently, as we talked about Bitcoin mining, I launched that at scale last year, and we've already had close to $70 million in invested capital, and we're producing close to, we will be producing close to 350 Bitcoin a month, which is significant. And really just providing another passive income stream for investors. So it might seem like we're kind of all over the place, but it's more of a function of I see opportunity and I like to invest personally. I invest in all these deals myself, and when I think they're of ready and sound nature for potentially other people to join, I just provide that opportunity, and that has allowed us to grow fairly quickly. We've only 2 years old, and we have close to 1,300 investors. Grown 4x year over year, more than that, 5x, and we have a lot of big numbers, etc., whatever it is. But ultimately, it's about really providing people opportunity to have these private market deals that most rich people just they invest in those kind of things, and people who are too busy to really think about it, to really actively find it, might not have the opportunity to. So I love just providing that opportunity to people.
So just to make sure that I understood correctly, you're saying in the past 2 years you've built out your multifamily arm and then also the Bitcoin arm. Are those the two arms that you're focusing on? Do you have other arms?
Yeah, so it's really four verticals, if we want to define it as that. One is the Bitcoin mining, the other is multifamily, the other is senior living, and the fourth is sort of our debt factoring business, which it's actually one of our more popular ones as well. We've had some trials with like offering some other small investments, but those are for primary lines of business.
And those arms, were those arms all built out in the past 2 years, or have you gotten to those four arms in the past 2 years, but you were focusing on others prior to that? Just kind of trying to understand the history and why you selected those four arms.
So all of it stems from me personally investing in them and either actively participating or passively participating, and realizing that when you add capital and scale, you get better results and outcomes potentially. And so, for example, multifamily, I've been personally and actively investing in multifamily for the last 12 years, to 13 years. And I've been passively investing as an LP in other folks' syndicated deals while I was very busy at my full-time Apple job. And then essentially understanding that I could just scale up my own activities and partner with folks that have operational resources in locations that I'm not in. And then senior living, also similar. I started as an LP investor, invested in a couple of deals, and then realizing that I could provide sort of a partnership to some of these folks and to the operators, and realizing that I could improve their business model the same way that I've been doing it all my life with my corporate jobs. And then the other two, similarly for Bitcoin mining, I've been mining Bitcoin for the last 6 years, and I've had Bitcoin since 2013. Wish I held on to more of it. Definitely remember buying Bitcoin at a very low basis. But not until like last year that I realized that it was a scalable industrial investable thing, and then putting it together as such.
I would love to talk a little bit more about the Bitcoin mining. And very interesting that you were doing it in 2013. I started buying Bitcoin and Ethereum back in 2015, and I very rarely meet anybody that was kind of earlier than I was, but you beat me by a long shot. But I'd love to talk about that because I think that's a hot topic these days. Everybody's interested in crypto. Bitcoin mining is a buzzword that a lot of people are hearing. But there are a lot of people who they may have heard of Bitcoin, they may have heard the term Bitcoin mining, but they don't really know much about crypto. Can you kind of step back and just explain to us, what does that mean, Bitcoin mining? What is your business model? What are you doing? How are you actually making money?
Yeah, so I have been in Bitcoin for a long time, and for the most part, I actually haven't really presented that or told people to buy Bitcoin, even though I'm a believer of the long-term thesis of Bitcoin. I just thought that was always a bit risky. as a real estate investor, I find Bitcoin mining have a lot of parallels. So Bitcoin mining essentially is, I mean, from a layman's perspective, it's just putting computers to work, and those computers generating Bitcoin as an outcome of their algorithmic function. And every 10 minutes, 6.25 Bitcoin is rewarded to miners, and that's consistent for and one lucky miner will win that. But what we do as miners, essentially, we pool our resources and get aggregate allotment of it. So I mine the 2 Bitcoin a day, where our cost to mine Bitcoin is closer to $12,000. Bitcoin is, where is that? Our profit margins are north of 50%. And of course, if it goes up, our profits are higher. So economics of Bitcoin, or Bitcoin mining, is just this function of having very powerful computers that are specifically used for Bitcoin mining, or validating the transactions. If you send Bitcoin to me, essentially the value of Bitcoin is that it creates a public ledger, where now all the computers will know that you have one less Bitcoin and I have one more Bitcoin, and that cannot be hacked. And for transmitting that data and for validating that, a miner will get a little bit of tipping fee and a little fee, and they will validate that. It's similar to the Visa network. They collect a little percentage, and they process the payment so that the network is secure and publicly available.
Yeah, so I think what a lot of people don't understand, when we hear the term Bitcoin, we think about a token, a virtual token or a virtual currency. We can buy it, we can sell it, we can trade it, but people don't really think about, where does Bitcoin come from? And that's kind of what you're focused on. Bitcoin comes from, we use the term mining, it's essentially computers running a lot of processes, factoring very large numbers. And so the way Bitcoin is created is that hundreds, thousands, millions of people are using their computers to factor these very large numbers to basically solve a math problem. And the person that solves the math problem, or the group of people, or it gets a little complicated, but essentially, if you are contributing to solving that math problem, you're rewarded with a Bitcoin. Is that kind of fair to say?
Yeah. So, and there are 19 million Bitcoin that has been mined. There'll be only 21 million Bitcoin that will ever exist that's codified into code. And this codifying in code is very critical because investors love predictability. They don't love when some central government can actually just ramp up the money supply, inflated. Current inflation rate for Bitcoin is 3%. Over the next 120 years, it will take to mine the remaining 2 million Bitcoin.
Yeah.
Miners will then provide that, and then over time, it's actually will transition to providing more transaction fees to as Bitcoin becomes more widely adopted.
Yeah, that's a really good point. I think a lot of people don't realize that as well. We have, would you say, 19 million Bitcoin out there, but there's a fixed supply. And every time you do these complicated mathematical computations to mine a Bitcoin, the next one becomes harder to mine because you're now getting into larger numbers. And so every subsequent Bitcoin, the first Bitcoin probably could have been done by using a calculator, just making that up. But basically not a lot of processor cycles, but every subsequent Bitcoin gets harder and harder to mine, takes a whole lot more processing power. And there are only, would you say, 21 million Bitcoin remaining to be mined before basically you've run the algorithm out.
Yeah, there's 2 more million Bitcoin. This total of 21
2
million,
million.
2 million Bitcoin to be mined. And I was mining fairly early, and I just sort of mining on my laptop and making a couple of Bitcoin every week. And back then, because it's sort of like it makes sense. When something is easy to do, people don't value it as much, right? And when it's so easily mineable, abundant, and there was no clarity in like what Bitcoin was or what it could be in the early days of Bitcoin. As it became more widely adopted and more widely known, now there's a lot of industrial-sized capital investments, and when things are harder, they're just going to be, it's going to be valued more, and that's the general thesis of Bitcoin, that there's this diminishing return of mining or incremental difficulty of mining sort of validates this trajectory that Bitcoin it's going to be the standard, or really the gold standard of digital currencies. And I don't really like the word cryptocurrency in this case. It's digital property. It's sort of the best kind of property to invest in. And you know this, you're a long-term investor in Bitcoin. I don't need to advocate for Bitcoin. I'm sure Michael Saylor could do a way better job than me. But Bitcoin mining is sort of in my perspective, if you're wanting to invest in Bitcoin, which is a great thing, I think long term, you know, if you're a long term holder, that's great. But if you're wanting to, if you want a little bit of advantage, I think Bitcoin mining gets you more Bitcoin over time. And I think Bitcoin mining has a lot more benefits on the downside, and potentially benefits on the upside. And so what I try to do is to try to figure out, is this a good asset class to be in? Is this a good investment? And then try to figure out, is there a better way to do this? Is there a advantage way, asymmetric benefit way to invest or to participate in this?
And that's interesting. So, I mean, like you said, I mean, it's no different than you could decide, I want to invest in gold. And you can go out and you can buy a bunch of gold. Or you can say, hey, I want to start a company that goes and actually digs and mines gold. And so if you have the ability, if you have the resources, if you can scale something to the point where you can actually build that company, you're probably going to make more money mining gold than you will going out and buying it. But obviously there's a business involved. It's not passive. I want to go back a little bit. You mentioned that your company is mining about 2 Bitcoin per day. Rough math, easy math. Bitcoin these days, or when this is recorded, is about $30,000 a Bitcoin. So basically, your computer equipment, your mining rigs, are generating about $60,000 a day. You give us some idea of like the scale of your operation, how many servers you have running, or maybe how many square feet of warehouse space, or I don't know how you measure the size of a mining operation, but whatever terms you use to measure, can you kind of give us an idea of what it takes to generate $60,000 a day in Bitcoin?
Yeah, let's talk about the unit economics of Bitcoin. And let's talk about it in terms of one miner. So those 2 Bitcoin a day, it takes around 5,000 Bitcoin miners. So let's just shrink it to the 1 Bitcoin miner. And one Bitcoin miner can cost $6,000 to $10,000, depending on how many you order, right? And of course, that's why I think investing like the way I do, where you get larger orders, gets your costs down on the capex, right? Essentially, these miners essentially an options contract to buy Bitcoin at $12,000 for the foreseeable future. And so we're sort of in a bunch of data centers in Niagara Falls, near a solar power plant in Nebraska, and we're launching a very sizable one in Texas as well. So we want to make sure that we're all over the place, because we want to have some secondary safety in case of potential regulations. But the unit economics is, if you have one miner, you're probably 90% of the cost is in energy. So you really need to make sure that your energy prices are down or as low as possible. And that one miner would generate typically, let's say, $20 a day, and it costs maybe $10 a day to run at today's price. Or at today's price, it's really the $20 is what's the variable. The $10 is fixed cost. So you make around 50% profit margin. And so take you maybe at today's price, probably take you a year, maybe almost 2 years to return capital back. And of course, these machines can last for 5 to 7 years. So those are sort of the unit economics of Bitcoin mining.
In terms of from a passive investor standpoint, when a passive investor is looking at this opportunity to invest in an operation like this, what does the structure of the investment look like? What is a typical deal structure in terms of the hold, expected returns, risks associated? Just soup to nuts, if someone was looking at an investment opportunity that you were offering, what should they be looking at?
So the way I structure our investment is very similar to all of our other real estate deals. And I wanted to highlight that because essentially this Investco, an LLC, that invests into, instead of a PropCo, an operating company, which then passes all the P&L profits and losses to the investors at a pro rata basis. And part of the losses include 100% depreciation of the asset, which is the Bitcoin miner. So in this case, close to 90+% of your investment. If you invest $100,000, you could get a K1 loss of 90%. For those who are familiar with those kind of things, happy to elaborate, of course. And so you're essentially investing into the profit stream of those miners. And the profit stream of those miners are generated every day. We then distribute those profits in the form of either Bitcoin or cash, because it's a tradable asset. Essentially, it's property, so we can send it to you as property, and then if you sell it, that's capital gains on your property. But we can exchange it for cash and then send it to you cash. 80% of our investors elect to take it in Bitcoin because they're long-term believers of it. But we have lots of investors who just take cash, and they're earning very high monthly returns on it. And the past year, we were delivering 5 to 8%. Now we're close to today's price. We're probably close to 3.5 to 4% returns.
So if somebody were to invest today, basically they could expect about 90% of their investment to be returned as depreciation. Is that in year one, or is that linearly spread out over the lifetime of the investment?
Yeah, that's year one. And the percentage returns I mentioned, they're monthly. So there would just be monthly payment. There's no capital back per se, although really it's the return of capital through the process, right? We're going to run these machines to the ground. We're going to take depreciation, and if we do sell them, and potentially in the market, if the market cooperates, there's a potential exit liquidity for that, and we're just returning capital there. But the stated plan is to run them to the ground, to essentially run them as long as they're profitable. And if Bitcoin price keeps going up, then it will be profitable for a long time. If it, at a certain point, because of the increased competition of Bitcoin miners, because of how profitable it is now at 50% profitability. Last year we were around 85% profitability. And if it keeps going down, that means that there'll likely be a slowdown in this investment. But for incumbent miners like ourselves, we will continue to mine Bitcoin regardless, which allows us to essentially, which means that Bitcoin mining is all about time in mining versus like timing when you start mining, which I love that fact that I'm dollar cost averaging regardless if Bitcoin's at 30K, at 40K, at 60K, at 100K, at 20K. As long as it stays slightly above 15K, we're profitable. We're providing interest payment or return to investors.
And if you end up running these machines into the ground, as opposed to selling them off, if you sell them off, I'm assuming then there would be a depreciation recapture. Whereas if you run them into the ground, you don't have that exposure. Is that correct?
Yeah, exactly. So it's all very similar to real estate as a property, as an asset. And so when you depreciate something, you reduce your cost basis to zero. And if we put $10 million in machines and the cost base is zero, and we sell for $5 million, now our profit is $5 million, and every depreciation recapture on that.
And so you would expect that a typical life cycle for one of these investments is probably somewhere in the 5 to 15 years?
I'm putting 5 years. Of course, if Bitcoin, does what I think it would do, it would be longer. But to the point that these are profitable investments day one without the need for additional capital, that they run self-sufficiently, and as long as sort of the math works out, and you're a long-term believer in Bitcoin, then I think it creates sort of potentially a longer effect. Now, the machines themselves could deteriorate over time, and I expect probably 10% to deteriorate over 5 years. We will replace and repair them as they fail, because we're essentially running them 24/7, right? These are machines that run loud, they run hot, and because of that, these temperature, essentially still machines. Some of them will die, some of them will be repaired. In the first year, we have warranty, but after that, we repair them ourselves. And there's a cost basis to it, so it's not about just profit and loss of that, just like any apartment building or any other real estate.
I assume that because you're generating decent profits, there's not going to be a capital call. Basically, you can fund any repairs or any other costs to maintain or replace the equipment out of the profits. So investors don't have to worry about getting a capital call or being asked to invest more money in the deal after the initial investment.
Yep, it's a highly profitable business for us to start, and the bet is, and it's two bets. One is, first of all, you can get a huge depreciation bonus, so that's going to sort of give you a little downside protection. In the case that Bitcoin goes down further, I did based on my model, I think you'll still be sort of way better off, or significantly better off than buying Bitcoin. We launched our first fund when it was 60,000 last year, Bitcoin. It went down to 30,000. For investors who potentially bought and sold, and if you're a trader, then, or if you're a retail investor, most of us don't really, tend to panic. We tend to go with what the market sentiment is. But if you're selling now, maybe that's not the best time. What this does is essentially locks you into mining Bitcoin, dollar cost averaging it, regardless of if it goes up and down. And when it goes up, because our cost is fixed, if Bitcoin goes up 25%, our profit margins go up more like 35 to 40%. So more returns to investors.
I have a quick question for you. Obviously, there's a lot of positive things that you're talking about here, and there's a lot of upside, but there are also a lot of risks associated too. You've touched on a few with respect to the longevity of the machines and the lifespan of the machines, but what other risks do you see threatening this industry?
I think there's two major risks. One is just sort of one is regulatory risks. The other is increasing energy costs. So we're in an environment where you see oil prices, the gas prices go up, natural gas goes up. Oh, and by the way, set aside, over the past 6 months, I've been investing more heavily into oil and mineral rights and natural gas. So that's also another big vertical that I'm going to be launching this year. Well, I have already launched a lot of investors already, because I could see that coming. So with Bitcoin mining, it's all about, can you keep your costs down as low as possible? And that's why Bitcoin miners want to essentially be right next to the source of production. What's really interesting is, for all the energy that gets created in the world, a third gets lost through transmission. Meaning that there's people that need to consume energy here, the consumption energy is here, and it's there's just some loss when you transmit energy over long distances, and there's sometimes it's not connected, and so Bitcoin mining is such interesting. If you have internet access, if you literally just have a satellite feed, you can essentially plug your machines in to where energy is produced very cheaply, but transmitted very expensively, to essentially capture cheap energy that most consumers, industrial or commercial or residential consumers, could not capture, because you're essentially at the source. And that's where our miners are at right now. It's near Niagara Falls, near hydropower. It's near solar, right? It's near places that there's not a lot of people. You can generate gigawatts of power, but there's not gigawatts of demand in that area. So it has to be transmitted to the major cities, and they just get lost. It just never happens. And so a third of all energy gets lost. And so it creates this really interesting dynamic through essentially monetizing energy for the first time anywhere. So you could have energy production anywhere that's cheap, and oftentimes that's renewable energy. And so renewable energy is actually very favorable, both from just cost basis, and myself as sort of believe in that sort of the cause of environmentalism, but also from a regulatory perspective. So that's the other part. Right now, Bitcoin mining gets a bad rap because it uses a lot of energy. This is true. It uses more energy than the state of Washington, the country of Denmark, et cetera, and the country of Argentina. But guess what? That energy likely, around 60% of that energy would likely have never been used at all. And 58% of all Bitcoin mining energy consumed to mine Bitcoin is from renewable energy. It's giving life to old and to old power plants, and giving secondary purpose to potentially restart the nuclear reactors in America. So it's actually creating an economic incentive. When you create economic incentives, you actually create more demand, more ingenuity. But that is a secondary order risk that, New York State recently banned future or was passing a law that's going to be banning future mining that uses fossil fuel. Well, guess what? Ours is grandfathered in, but also ours is 100% renewable, so it wouldn't have an impact on it. But with these changing times, want to make sure that you're on top of that. That's why we also gravitate to Texas, very business friendly, very Bitcoin mining friendly, and that has been the center of the universe for the last 6 months since China banned Bitcoin mining, and a lot of the capital and resources have gravitated towards Texas, and because they have their own unique grid system.
Awesome. So for anybody that might be interested in getting into this investment, is it an open-ended fund or a closed fund? Basically, can they get in at any time, or do you launch new funds for new investors at regular intervals?
We launched new funds for investors at regular intervals. This locks in investors to sort of the pricing that is of the time. It would be, if Bitcoin goes up, the pricing of ordering Bitcoin miners would go up as well. Bitcoin goes down, then the pricing of ordering Bitcoin miners goes down, and so it does take, actually it's funny that most investors likely won't want to invest when Bitcoin goes down, but it's probably the best time to invest, so, and best time to mine as well. So we're mining dip right now. We're buying a lot of machines and deploying our capital wisely.
Awesome. And what is the minimum investment?
Right now it's 50,000.
We're going to transition now to our 3 questions that we ask every guest. And are you ready, Eng?
Yes.
All right, here we go. So the first question is, what new thing, I think I already know the answer because you kind of talked about it for a brief second, but what new thing has sparked your interest that you are researching and pursuing, potentially investing in, or just wanting to learn more about?
Yes, and that is the thing that we're probably talk about. So oil and gas investments. What's interesting that there's obviously a heightened demand of oil because now we're outside the pandemic. That's materializing in heightened oil and natural gas prices, and also because of the embargo with Russian oil, which doesn't produce that much of it. America still produces the most amount of oil, but it takes a long time to recover from what happened in COVID. COVID essentially decimated the oil production market. It made no economic incentive to create more production of oil and gas being the key variable here. And so what's interesting that is if you're investing now, you should be participating in sort of this long-term tail that I think will materialize. Fossil fuels will be the bridge to renewable, and I strongly believe in renewable energy being the future, but there needs to be a bridge to get there. So mineral rights is a very interesting potential investment. Essentially, you own the land below the surface. You own all the resources that's collected, including oil and natural gas. And anytime somebody essentially leases your land, maybe ConocoPhillips, Exxon, they will put a drill in, they will pay for that cost, they will take that risk, they will have the expertise. You will get a royalty interest, a percentage of the profits by just owning the land. So what I've been doing is essentially trying to find all these land that I think are very near all these sources, and then acquiring them. So one of the interesting new things I've been looking at.
Awesome. Question number 2, what current legislation or what current economic situation, I'll let you decide which of those is most concerning to you, do you think poses the greatest risk to your investing activities?
I think the Federal Reserve is always what I focus on a lot. And, there's a midterm election this year. I think the ruling bodies will try to make sure that we have as best an optics as possible. But the Federal Reserve also always kind of moves a step too slow, both on inflating the money supply as well as reducing the money supply. And right now I think they're taking it a bit too far, and it's going to decimate growth. when you have higher interest rates, you sort of reduce the impediment for you reduce the ability for investors to invest the money in people because now you have a higher demand hurdle for the investment. And so as an investment company, as an investor, it just makes investing more costly and makes the deals that we have to find or have to invest in have to be that much better, which just usually shrinks the potential investments.
Excellent. And our final question is, what is the best piece of advice you've ever received that you are willing to share with our audience?
I think the best piece of advice has always been just be flexible. One thing that I am never going to say is I'm a Bitcoin mining company, that I am a real estate investor, I'm doing this and that, because ultimately I'm an investor, and being flexible has allowed me to navigate different things. You know, you go into anything, any enterprise, any venture, any relationship, if you're so set in your ways or you're so narrowly focused, I think without that flexibility, you will not be open-minded enough to think of opportunities that arise, paths that could lead that you never thought of. And so flexibility, I believe, has been the key to my success, and hopefully people can internalize that for themselves.
That's great advice. Thank you so much, Eng, for joining us today. If you want to check out more, should they check you out at tozycapital.com, or is there another place they can reach you?
Yeah, check us out at tozycapital.com. Fill out the form, very easy, it's free. You can have access to all of our investments and our historical stuff. Connect with me on LinkedIn or Twitter. I'm pretty active in both.
Excellent. And for our listeners, Touzi is spelled Touzi, capital.com. So make sure to check out tozycapital.com. Thank you again, everyone, for joining. If you enjoyed today's show, you can like and subscribe on your favorite podcast provider as well as on YouTube. That is it for today, and we hope this show was another step in your journey of having your money work hard for you. Thank you again for joining the Passive Investing Show.